Hello and welcome to Martyn Lucas Investor. My name is Sensei and you are watching a special Fed FOMC minutes report coming to you live, and time is just below 25 minutes until we get that report straight out of the FOMC. We're going to see Kevin Warsh's first FOMC minutes. It's going to be very exciting. It's going to be very informative. We're going to learn a lot. And what a day for it to come when the war seems to be back in full force. The war is not what's important. Oil is what's important. Of course, the war is important for the people on the ground, but what I'm talking about today is investments. And what's concerning about the war is oil. If oil heads back up, then inflation goes up, then the Fed raises interest rates, and then the market crashes. Of course, it doesn't need to go into that order. If the market knows the Fed's going to hike rates, the market will crash before it happens. And today, with the minutes, we get to see a behind the scenes. This is behind the scenes of the FOMC. Why did they vote the way they did? What is Kevin Warsh changing? What is his direction for the Fed? How many people want to hike? What was the discussion behind the closed doors? What does it mean for Bitcoin? What does it mean for XRP? Why is gold going down when the war's going up? All of these questions will be answered in today's live stream. If you're watching later on, then you can also, this information will still be very relevant. I don't expect the market to pump or crash based off the minutes unless there's something very extreme in it. But the reason it doesn't do that is because not many people watch it. In fact, we've proven time and time again, when we cover these minutes, we get a sense of the market direction that so far has been about 100% accurate. So let's see if we can do it today once we analyze the minutes coming out. The first thing I'm going to ask everyone to do is hit the like button. No one's done it yet. 10 likes only. What is going on? Please take 1 second to hit the like button. What is everyone doing? Please do hit the like button. It takes only 1 second. You guys are still not doing it. Maybe you're a bit behind. Make sure you're up to date with the stream. Press the live button. Let me refresh it. How many likes do we have now? Okay, we're waking up. 27, 240 people watching. It's not good enough. Guys, please do hit that like button on your way in. We are going to cover the FOMC minutes. They're only 23 minutes away. Newsletter members, you have already got the cheat sheet for today. It's relevant now. It's relevant after the event as well. Remember, it's about being educated. It's about understanding. Even though you might read the newsletter tonight and you might think, I'm no longer going to read this newsletter, it's out of date. It's not. You're going to learn a lot even by reading the newsletter later. Of course, you can skim through it now. You can skim through it before the show started. You would have received it about 45 minutes ago. Okay, so have we got the likes up? Can I start the show? I'm not starting until we hit 75 likes. I mean, that's not too much to ask. What are we on now? Oh my God, and I refresh it and look at what we just hit. We've just hit 75 likes. So I'm going to start the show. Let's start off with a market watch. So let me get rid of that. Let me hit the like button myself. Let's start off. Let's get that up to 100. There's still a lot of people that haven't, but I want to start the show. So I'll start. You guys keep hitting the like button. Let's start off with a market watch. Just a quick look into the market before we go into the details. What is up today? Only two things, really. Oil and bonds. Two things you don't really want up. Oil is now up at $74. It sold off a little bit from the highs of the day, $76. It's still very low. And this is why I'm not panicking. This is why I'm not going, okay, there's a full blown out war. We're back to where we were 3 months ago. Oil is what you need to look at. Oil, if we're looking at WTI right now, WTI is at $73, $74. I'm not going to be concerned about oil, WTI, until we get above $78, $80. This is still much lower than a few months ago, which means inflation is still going to come down. In my opinion, we'll come on to that a bit more in a minute, but oil is up, and congratulations to all newsletter members. You would have seen my analysis on oil if you were looking out for the charts of the day and my analysis. I said there's going to be a gap close at $67 from where we started the war previously. Oil is is down a lot right now. I would be interested in taking a position at these levels. That was at $67. That's the local bottom, already up. How much? Let me check. Up 13% in less than a week. So that looks good. I'm not going to take profits for my oil position until we hit maybe $78. Somewhere around there is where I would expect to take some profits. But yeah, oil is still very low. That's why I'm interested in the position. Would I buy it now? Probably not. Okay, oil is up. Bonds are up. If bonds are up, this is why gold is down. Bonds, essentially a 10-year bond. Oh, thank you. Stay hydrated. Look at that. What is that? I think it's a GIF. Thank you for that. I don't know what to do with them. Don't know what they are, but I'm sure you're putting your hard-earned money into these gifts, so I appreciate it. US government bonds. The reason I look at the 10-year, of course, we can look at the 2-year. That's important as well. But the 10-year is most influential to people and moves the market the most because the 10-year bond is essentially mortgage rates. Where are mortgage rates? And that affects the economy the most. In fact, the Fed normally follows where the 10-year goes. Remember, the Fed have control over short-term interest rates. They don't really have control over long-term interest rates. If the market thinks the Fed is mispricing their interest rates, then the market will correct the Fed and go, actually, this is where bonds should be. And that price is about 4.5% right now. The current interest rates set by the Fed are about 3.5 to 3.75. Normally, you're a bit lower than the 10-year. Right now, we're quite a bit lower. Nothing too extreme, not let's have a rate hike this month, but we are higher. So that is a reason some people say rate hikes are coming because the 10-year bond is up. But also, let's just track back to what the 10-year actually means. 4.5% is where the 10-year bond is. That's essentially, if you put your money away, give it to the US government, lend it to the US government, they're going to give you 4.577% for 10 years, guaranteed, unless the US government default, which is obviously a very, very low risk. It's what people go into. Bonds become a larger part of people's portfolio the closer they get to retirement, or people put their money into bonds when they want to sit on cash waiting for opportunities. Mortgages also track the 10-year as well. So if this continues to go higher, mortgage rates go higher. My analysis on the 10-year government bonds is we're going to go higher. I think we're having a multi-year breakout. I think this is going to maybe not go higher tomorrow or the month later or next year, but I think we are trending up for 10-year, and I think we're going to start hitting levels we haven't seen in decades on the 10-year. Because if you look at where the 10-year has been previously, we have to go back to 2008 to see sort of a 5% and above on bonds. So I think we are heading to 2008 levels on the bond market. And if bonds go higher as they are today, as they have been sort of over the last few days and potentially over the last few years, if they continue going higher towards 5%, 5.5%, 6%, people are going to look at their portfolios and go, you know what? I don't need to risk my money and put it in the stock market. I'm happy enough with 5%, 6%. People will look at gold and go, you know what? Gold doesn't produce a yield. Gold isn't a business. I'm very happy earning 5%, 6% on a bond, no risk. Why would I own gold? And that's the reason why markets are down today. Bonds are up. Oil is up. If oil's up, the market's more risky. Bonds go up. So bonds are up and the market's down, including gold, silver, crypto, equities. Everything's down because bonds are going up. So that's the story of the day right now. Let's see what the Federal Reserve minutes are going to how they're going to play into this and what data we get from them going forward as well. They give us a very good indication as well. That's what we're covering in about 16 minutes time. That's the purpose of today's show, is the FOMC minutes. If you have just tuned in, please do hit the like button. Please do subscribe if you haven't done so already. We are running a 25% annual discount for anyone who joins the newsletter today. Remember, that newsletter is not just a newsletter. You get all the perks. So if you go into the pinned comment, I don't know if you can see it here. Look at all these gifts. If you see the pinned comment over here, essentially you get the newsletter. There's one subscription that includes the newsletter, the chart training course, the indicators, the Discord access for my specific part on Discord. You get the net worth tracker, the cheat sheets, all of that is included for 25% off. So if you want that, I'll put that in the description. I'll come over to everyone's, wow, look at all these gifts. How are you guys doing this? I'm going to keep an eye on this and show everyone's gifts. Laurie has sent a gift. Brent sent a gift. Thank you guys for sending all these gifts. I don't know what... I'm loving it. I'm not going to complain. I don't know what they are, but I'm loving it. I'm sure it's some sort of super chat, so I appreciate it. I will come back to everyone's comments. I am keeping an eye on them on a different screen as they come in, but we will come over to Q&A after the FOMC minutes have been released. So yeah, let me just scroll through, see if there's anything I need to respond to. Hello from Norway. Hello. Hi, everyone. Thank you for tuning in. Yeah, I think we're good. So what I'm going to do is come back to the charts and actually go over to today's newsletter. Remember, the newsletter, we're not going to go through it all at all. This is a very much a premium perk. So we'll go through maybe the frequently asked questions and then leave the analysis for the premium members. So let me tell you the headlines. Trump this morning came out again, and let me see if I can make that a bit smaller. No, it's fine. Let me close that. So Trump came out this morning and called the Iran ceasefire over. Oil jumped 6%, and that went towards $78. Stocks came down. Gold fell on war escalation. Again, you might think, why is gold going up? Isn't that the safe haven? Doesn't gold go up when wars start? Well, if bonds are going up, if gold's going down, the market's scared of inflation. So if gold goes down and there's a war coming out, it tells you exactly what the market is scared of. And the market is scared of inflation. They're not scared of the war. They're scared of inflation. That's why gold's down. So into the middle of all of that, today, 7 p.m. UK time, 2 p.m. Eastern time, 13 minutes, the Fed will publish the minutes from Kevin Warsh's first FOMC meeting in the chair. 9 officials wanted a hike at that meeting. Since then, jobs have cracked one way and oil spiked the other. And tonight, we find out how serious they were. So since that meeting, again, this was a few weeks ago now, the FOMC, this is the minute, so it's kind of out of date, but it hasn't been released yet. They didn't know about the jobs data. We covered jobs data last week, and it was a surprise to the downside. The market liked it because essentially, if jobs are cracking, the Fed can't really afford to raise rates unless inflation's really bad. They don't know about that yet, so we'll have to take that into account when we're going through the minutes that come out in 13 minutes time. The minutes that come out in 13 minutes. There we go. So let's go through some of these questions that I've seen you guys asking, and I've seen people asking online as well. So what are the FOMC minutes, you might ask? They are the detailed written record of the Fed's last FOMC meeting, released 3 weeks after the decision. So the FOMC meeting, you would have seen Kevin Warsh first meeting, that was 3 weeks ago. The decision is old news. What we're getting today is the minutes from that meeting. So the minutes are the argument behind it. Who's worried about what? How many of them are worried? How hard they push? The statement is the verdict. The minutes are the jury room. So let's see what the minutes are. This has never been released before. It's going to be released in 12 minutes. This is fresh data for the markets to feed into. What's going on in the chat? Someone was saying, please tell me, sell or buy? Sell or buy? Guys, I don't give financial advice. You know that by now. I don't tell you what to do with your money. I report on the information. I tell you what I'm doing. I give you the insights I have based off day in, day out researching the markets and putting together these newsletters. So I don't tell you what to do. I give you the information. You guys, again, even if I wanted to tell you, I wouldn't, because I don't know what your situation is. It's different for everyone. Are you 50 years old? Are you retiring? Are you 20 years old retiring? Is this your last penny? I don't know what your situation is, so I can't tell you what to do. That's a decision you make by yourself. So what time are they coming out? 7 p.m. UK time, 2 p.m. Eastern time, on the dot. This isn't like Japan when their decision comes out. There's like a 2-hour window. No, it comes out in 11 minutes on the dot. We've covered this many times, and it's always to the second. What we're going to do when that comes out? Well, I'll be analyzing it behind the scenes. I'll be analyzing it with my team behind the scenes. I'll be going over to Bloomberg while that's happening. So we'll have Bloomberg running for a few minutes while I will be analyzing it, and the team will be analyzing it. Then I'll give my thoughts on it. Then we'll see the market reaction. Then we'll digest it, and then we'll go over to Martyn for the closing bell, just to give you an idea of what's going to happen after these minutes are released. Make sure you buy high and sell low, says Thomas. Yeah, that's exactly what to do. So, which meeting is this? This is in relation to the 16th to the 17th of June meeting. Two things make it bigger and normal than the normal set of minutes. This is actually more important than the other minutes we've covered. It was Kevin Warsh's first meeting as chair. Is he going to switch it up? Are we going to get a different sort of minutes here? Has he changed the protocol? We don't know. We'll find out. And also, remember, this happened before the 2nd of July, where we got that shock jobs number that was much lower than expected. So don't expect to hear anything about that in this minutes, because the minutes were before that was released. So another question people might be asking is, why the hell am I watching this show? We already know that they held rates. So why does tonight matter? Is a nicer way of asking the question. Because we know they held at 3.5 to 3.75. So knowing that tells you nothing. So knowing that they just held rates actually tells you nothing about how close it was or where the committee leans next. We don't know. Were they on the verge of raising? Were they on the verge of cutting? Was Kevin Warsh telling everyone, let's cut rates? Or was he? We don't know anything about what happened in that meeting. But remember, the minutes, it's like when you're in a courtroom and everyone's writing down what's going on. We're getting that released. And again, it's the first one with Kevin Warsh. So it is important. The minutes are where you find out whether a hike was seriously on the table in the room. So we want to know, are they serious about rate hikes? We're hearing rate hikes every single day. I don't think they're that serious. I don't think that they're that likely to raise rates anytime soon. I think maybe maximum one rate hike this year, but I don't think they need to unless the war really starts pushing oil up. But anyway, we want to know what they think. Are they seriously talking about rate hikes? I mean, I'll be surprised if they're seriously talking about rate hikes. We'll find out in 8 minutes' time. So we're going to find out whether a hike was seriously on the table in the room, and also how many people wanted it. Was anyone screaming for it? Was everyone wanting it? Did Kevin Warsh tell everyone not to? We'll find out. Same decision, very different meaning depending on how close the room actually was. Minutes, dot plot, statement. What's the difference? Well, we're getting the minutes today, and all three of them are very different. The statement was a short version of what we're getting today. The statement was read out on the FOMC day. The dot plot, we get 4 times a year. That's where we see where the officials are projecting rates to go, but they're shown up as anonymous dots. We don't know who's done what. And the minutes, which I think are pretty important. Most people don't like to cover this, but I don't understand why, because they've proved to be very effective every time when we've covered it and understood what it means for the market. So the minutes that come out today are the written arguments behind all of it. Why did they choose to keep rates where they are? Why are they thinking about rate hikes? Were they close to rate hikes? So tonight is about the argument, because the June dots have been public since the meeting. We already know that 9 people wanted a hike. 9 people at the Fed wanted a hike. We want to know why and how much they wanted that hike, and we'll find out in 7 minutes' time. If you guys have just tuned in, one thing I ask you, it takes 1 second, and I know so many of you have not done it yet. Hit that like button. Let's get up to 200, 300, 400 likes. I know we can do it, so please take a second to do it. If you haven't subscribed yet, please do. If you want to check out the newsletter, you can sign up for absolutely free. There is a free plan, and there's no ads. Imagine that, a free plan, no ads. I make it's all funded by the premium members. So if you want to be a free member, you can, and hopefully in the future we see you as a premium member. If you want to become a premium member, today we're getting 25% off. 3 people only. So the first 3 people only today. We don't want to flood the newsletter. There will be a hard cap in the newsletter in the future, because I want to be able to answer everyone's questions. So remember, if you're a newsletter premium member, you get one-on-one with me. You can DM me anytime, ask me any question, ask me for chart reviews, join me for Sundays with Sensei, where you can ask me for chart reviews and do Q&A. You can get the daily morning forecast newsletter 2 hours before the opening bell, every news story you need to know about, the chart of the day, the deep dives if they apply, the cheat sheets, newsletters like this before major events, the net worth trackers, my trading post, that's coming out shortly. That's going to be so fun. The XRP weekly, which is our crypto report every week, plus a lot more. And you can get that for 25% off. The link is in the live chat. Next question is the Fed about to cut? Some people still ask me that every day. When's the next rate cut? Are rate cuts coming? No. Let me say it again. No, because most of that noise online has it backwards. This is a Fed that dropped its cut bias. They're not even talking about cuts. I mean, I wasn't talking about rate. Me and Martyn have said this year, no rate cuts. Everyone kept saying rate cuts. The Fed then admitted they're not going to cut rates. Now everyone needs to understand there's not going to be any rate cuts this year, probably none next year either, unless the jobs market unless we go into a recession. So they dropped its cut bias. Inflation is above 4% and pretty sticky, and had 9 of its 18 officials who submitted projections penciled in one rate hike this year. So Warsh himself didn't submit a dot. The live debate in June was hold versus hike, not hold versus cut. No one is talking about cuts. Next question you guys are asking. Jacko says, gracias, Mr. Sensei. You're my morning compass. Yeah, thank you. I know a lot of people love to read the newsletter when they wake up in the US, and some people read it on their lunch breaks in the UK before the before the opening bell. So yeah, all the news stories you need to know. Again, we limit it to sort of 5 and then plus a few smaller news stories, just so that you have all your news in one place if you're investing in the financial markets. And that's the morning newsletter. That's just one of the perks you get. Okay, next question. Are they about to hike? They were leaning that way in June. We need to see the language that they talk about in about 4 minutes' time. How much, how confident are they that they're going to raise rates? They're leaning that way. The market, if you look at the Fed Watch tool, is saying this month there's a 32% chance of a rate hike, and by September there's a 51% chance of a rate hike. So the market is thinking rate hike. They've not really suggested that way. I don't think we're going to get a rate cut this month, but who knows? Maybe I'm wrong, but I'm pretty confident we won't. That's the way the market was leaning. And then last week we got the jobs number, 57,000 against 115,000. Remember, if the jobs market is weak, they do not want to raise rates, because if they raise rates, that goes against the jobs market. If the jobs market cracks, they have to cut rates. So we got that last week, which made the market a bit more bullish, because it sort of put an argument against a rate hike for the Fed, and the Fed will be looking at that. Again, remember, they don't. When we're looking at this report, this is from 3 weeks ago. We got that jobs report from 1 week ago, so don't expect that jobs report to be in these minutes. The committee, where were we? So roughly half, and the market cut the rate hike odds as well. Yes, they did. Now oil has spiked back the other way. Oil is up today because of the war. That's the whole tension tonight. The committee that sounds hawkish in these minutes has not seen the jobs miss yet, and it hasn't seen this week's oil spike either. One says the hawkish tone is stale, the other one says it's suddenly relevant again. So in my opinion, they cancel each other out. The jobs data last week that was sort of bullish for the market cancels out the oil spike today, because the oil spike today isn't horrendous. We're still below 80. I don't think that's a problem really, unless we get above 80. So last week's bullish candle and this week's bearish candle, I think they cancel each other out. So whatever the Fed say in this meeting, I think is very, very relevant, and we'll see in about 2 minutes time. Guys, please do continue to hit that like button as well. Next question you guys have asked me. What's actually different about Warsh's first minutes? Remember, this is Kevin Warsh's first FOMC minutes. He had the meeting. This is the minutes. At his debut, he leaned on price stability and played down the dot plot. He said, I don't like the dot plot. We need to get rid of the dot plot. So the question is whether these minutes read like Jerome Powell's Fed with a new signature, or like a genuine change of tone. This could be massive. How different is Kevin Warsh to Jerome Powell? Let's see what happens behind the scenes. This is the first minutes, and it basically sets a template for how the new chair communicates. Remember, that's something Kevin Warsh has full control over, the way that they do things at the Fed. And one of the things they release is the minutes, which is being released in 1 minute and 25 seconds time. Is Kevin Warsh going to completely change the tune with it? We'll find out. What's the single most important thing to watch? Well, I'll be analyzing it. Remember, in about a minute's time, we're going to go over to Bloomberg. They're going to give their analysis. My team are going to work on behind the scenes to give me an analysis. I'm going to be looking at it 5 minutes after the report. I'll give you my thoughts while we're at Bloomberg. Then we'll look at the market reaction. Then we'll look at the charts. Then we'll look at the charts as well. Where are we? Yeah, we're looking at then we'll look at the charts as well. We'll look at your questions and then we'll go over to Martyn live. So stay with me throughout this. We're about 46 seconds away from that report coming out. And the most important thing to watch is how many members are now hawkish. So we're going to look at the wording that switches from several to many or many to several, a jump from several to many on inflation risk, or an explicit line about rate hikes. Is hawkish even with unchanged rates? So we're going to see how hawkish are they in the wording? Are they more dovish? Are they more hawkish? It's all in the wording. Remember, this is a report that's going to come out. I'll be looking at it, looking at all the words. And yes, this can move your portfolio tonight, but I'm more interested in what it means for the future. So let's go over to that breaking news story. Let's go over to Bloomberg. They're live right now, and then we'll go over to my thoughts as well. Here we go.
Of 2026, that was the first one that Kevin Warsh oversaw as Fed chair. That was on June 17th. So we are, of course, awaiting market reaction to that. I'm Carol Massar, along with Bailey Lipschultz. He is in for Tim, who is out this week. We'll see whether we get any more clarity on how the new Fed is under Kevin Warsh. For more, though, let's head to the Federal Reserve in Washington and to Tyler Kendall.
The minutes from Kevin Warsh's first meeting as Fed chair show that a few Federal Reserve officials said there was a case for raising rates, even as they decided to keep rates on hold in June, as we try to glean more insight into what caused this more hawkish shift on the committee. Keeping in mind that this was the meeting where we saw those projections basically show that there are these two equal camps that were emerging on the FOMC, as 9 members saw at least one rate hike this year and 9 members saw no moves or a rate cut. And that was really reiterated in these minutes, reflecting the view among officials that some see higher interest rates needed, while others say that there is still a case to stay on hold. The minutes tell us that the discussion really centered around inflation risks and restoring price stability. Writing in part, quote, participants judged that the risks to the inflation outlook were tilted to the upside. They observed that both core and total inflation had moved higher, generally attributed to the increases to the lingering effects of tariffs, supply chain disruptions, and the related to the closure of the Strait of Hormuz. But then there was also this discussion around the CapEx build out related to artificial intelligence. On that, the participants said, quote, many participants noted that ongoing strong demand for AI infrastructure would likely sustain upward pressure on prices for technology products and electricity, going on to add that some participants remarked that productivity gains associated with AI adoption would eventually reduce production costs and increase aggregate supply, which should put downward pressure on inflation, though they noted that effect would likely take time to materialize. On the labor market, participants generally saw labor remaining stable in the near term, adding that they assessed that the downside risks to achieving maximum employment had moderated a bit. Now, a huge question, of course, going into today was what would these minutes look like under a Fed chair, Kevin Warsh? And we have our answer, which is that they basically look more or less the same. All the same sections were there. We didn't really feel that they were shortened in any sense. We can say that it would take a majority of the voting members to approve the minutes. So maybe there wasn't a consensus there when it comes to what we know Kevin Warsh would like to see in terms of changes to the Fed's communication style, because Carol and Bailey, so you both know, Warsh has vowed to move the central bank away from forward guidance. That was included in this statement, with a majority of participants remarking that they saw advantages in shortening the statements after FOMC decision.
All right, great stuff as always. Great breakdown of those latest Fed minutes from our Tyler Kendall. She's outside the Federal Reserve in Washington, D.C. She is our Bloomberg News Washington correspondent. Just a quick check on the trade. Not seeing too much reaction, certainly on the equity side of things, maybe a little bit lower. S&P was down, Bailey, about 36 now, actually a little bit less now. It's down about 25. NASDAQ has actually turned positive. It was down about 66 points.
Yeah, it seems like a little bit of a bid right now. Just keeping an eye, looking at the 10-year right now,
yes.
4.57%. And then also the dollar started to move higher, but now Bloomberg Dollar Index essentially unch on the day. So investors may be digesting that news, except for nothing quite new.
Yeah, it doesn't look like much movement in it overall. We're going to talk more about it in just a moment. We're going to
Bloomberg always do such a poor job. I mean, she just said the markets have gone down on that news. In fact, the markets are up on that news, and I've got the full analysis for you guys. So let me tell you all about it. Firstly, the market reaction: oil is still down, bonds are down a little bit, but yeah, the market is up slightly on that news. Gold up, S&P up slightly on it, Bitcoin up slightly on that news, XRP up slightly on that news, FTSE up slightly on that news, silver up slightly on the news. But I told you the main event isn't it whether the market's going to pump or dump. I told you it's going to be pretty flat. What we want to know is actually what are in those minutes. So I have analyzed the report and let me tell you the headlines. So if you have just tuned in, first thing I'm going to ask you to do is hit the like button. It takes 1 second. I think there's over 1,000 people watching now, and we've got only 200 likes, 100 likes. Guys, take 1 second, hit the like button. You don't need to panic right now. This isn't a massive market moving FOMC event. This is the FOMC minutes. They are even more important than the FOMC. And that's why we're going to digest them now. So give me 5-10 minutes and I'll tell you exactly what we're in these minutes, but don't panic. The market's not going to pump or dump based off this. It's about what's inside it. So if everyone could just take a second, hit the like button, subscribe if you haven't done so already, sign up to a newsletter. It's absolutely free. There is an absolutely free subscription. The link is in the live chat. If you click on it and then go to the free plan, you can sign up for free. But 3 people today are going to be the lucky winners. 25% off the annual plan for 3 people. The link is in the live chat. Use that link. You can sign up for the free plan or the annual plan where you get 25% off. You'll get all my trades, the trading posts, the daily newsletters, which has a chart of the day, the deep dives, the everything you need to know before the market opens. You get Sundays with Sensei where you can do chart requests, ask me questions. You can DM me anytime, any day. You can take advantage of the net worth tracking tool. And again, there's many, many more perks, but we're not going to go into them all now. You can see what they are when you sign up. The link is in the live chat. So hit the like button, subscribe to the newsletter, whether it's free or the annual plan. 3 people can get 25% off. And now let me give you the read on today's FOMC minutes that just got released. Remember, this is Kevin Warsh's first FOMC minutes. The headline: hawkish hold. Obviously, they held rates and it's got a hawkish tilt to it. So that is confirmed. No one behind the scenes is very, very bullish in there. So the hawkish hold is confirmed and the hawks won the language war. More hawks than doves. The vote was 12-0. A unanimous vote, but the easing bias is dead. Members also agreed, and this is in quotes, members also agreed that the statement would not repeat the language that it had suggested on easing bias. So that's why everyone was unanimous. If you cast your mind back to previous FOMC minutes, there was a big divide, the biggest divide for the last 30 years, because lots of people didn't want that easing bias. Well, everyone is on board again. A unanimous 12-0 vote. Why? Well, because they removed the easing bias statement, meaning everyone is happy to vote in favor of it because they're not talking about anything in regards to bullish language, dovish statements. Everyone is pretty much on board that they're hawkish. April's fight over that line, and the side that wanted it got everything. So yeah, April again, big disagreements in the Fed. Some people wanted rate cuts, some people wanted rate hikes. Because there was a line that suggested a easing bias, a rate cut bias, they removed that. Now everyone is on board again. 12 people unanimously voted that they shouldn't be talking about rate cuts. That is hawkish. Now, let's talk about the counts. So a few participants. Remember, I told you what's important is when they say a few, many, several, that's all important. So let me tell you what's going on within the Fed. A few. Again, these words are very important. They pick their words very carefully. They're like lawyers. They pick their words very carefully. So when they say a few, they mean a few. 3. So a few participants, 3 of the 19 commented that there was a case for raising the target range for the federal funds rate at this very meeting. So there we go. Here's the information being uncovered. 3 people said we should have raised rates. 3 people wanted rate hikes last meeting, not this meeting, not the one coming up this meeting. They wanted rate hikes 2 months ago. That is 3 weeks ago, essentially, last month. They wanted rate hikes last month. That's very interesting. If 3 people wanted it last month, many more are going to want it this month. So 3 people commented that there was a case for raising the target range for the federal fund rate at that very meeting. They held anyway, but that was the first explicit case for a hike now, the cycle. So the first time in 2, 3, 4 years, we're looking at people at the Fed saying, let's raise rates today. Last meeting. They're going to say it again. Nothing's got better, really. I mean, oil's come down a bit, but it's back up a bit. We'll come on to the charts. We'll come on to oil. We'll come on to the war. We'll come on to XRP, Bitcoin. But let's just digest what's just been released. The big ladder move. The big ladder move. In April, several participants, so several, 5 to 7, were worried elevated inflation could start feeding wage and price settling. Tonight is it's the majority of participants. Again, wording has changed. Again, this is something that Bloomberg are just not covering. I don't know why. A little thank you to my team behind the scenes who have just put this together for me. So a few participants. So we know that. The next one. So several participants. So previously in the last minutes, 5 to 7 people were worried about elevated inflation becoming a problem for wage and price settling. Tonight, with the minutes which were just released, that's changed from several. Again, these words very important. Several to majority. So a majority, remember, is 10 plus. So at least 10 people now compared to 5 to 7. So 5 people have come over. Highlighted exactly that. Several to major in one meeting. That is the single most hawkish shift in this document. There we go. Majority of participants are worried that elevated inflation, let me read it again. The majority of participants, these are Fed participants, the people that choose if there's interest rate hikes, cuts, or holds. The majority of them now, previously several. The majority are worried elevated inflation, high inflation, could start feeding wage and price setting. Again, they're worried that inflation is going to continue getting worse because of also wages going up, which will feed back into inflation. On the year-end rate, many participants, that's 7 to 10, saw it within or slightly below the current range. Many other participants saw it above. That's the 9-dot split confirmed in words. So that dot plot split, many people are now saying that rates will be higher by the end of this year, essentially, is what that means. Almost all said policy firming, meaning hikes, so almost all said hikes would likely be warranted if inflation stays elevated. So they've said this very clearly. Everyone, almost everyone, maybe get rid of, maybe Kevin Warsh has not said this, but let's say 80, 90+% of people in the FOMC, the people that make the decision, have now said they're going to raise rates, or rate hikes will become sort of the base case if inflation stays high. What do we mean by high? Well, we have to go off our best guess, which is 2% inflation is their target on PCE. Probably 2.5%, 3%. If we're staying above 3%, they're going to raise rates, and obviously we're way above that right now. We have to see how low CPI comes. So guys, later this month, the biggest event before the FOMC is CPI and PCE. Actually, no, we're not going to get PCE. So it's going to be CPI and PPI. CPI and PPI, I think, is next week and the week after, before the FOMC. Let's see how low inflation has come, because if it's still sticky and the war had ended, because obviously it started again today, but it had ended. So we'll see what that means for inflation. If it was still sticky when oil had came down 50%, that's the biggest problem out there. And that's when I'll probably be selling 80% of my portfolio. So let's cover inflation this month. So if you guys see my face with inflation on YouTube, click on it. That'll be early morning in the US in a couple weeks' time. And that'll be CPI. I'll be covering that, just a side note there. And again, the cheat sheet will be available to all newsletter premium members. So if you haven't signed up, The link is in the live chat, and I'll tell you exactly when that is. That's the next real big event, CPI and PPI, coming up this month before the FOMC. So again, what they've just said, if CPI and PPI stay higher, they're going to raise rates. Almost all said policy firming, meaning hikes will be likely warranted if inflation stays elevated, but the same sorry, I've got some notes coming in from my team. Let me just see. Yeah, so almost all said policy firming, meaning hikes, would likely be warranted if inflation stays elevated, but the same almost all would hold or cut if inflation fades. Both scenarios sat on the table, fully conditional. So yeah, we will see. Essentially, but almost all would hold or cut if inflation fades. Yeah, so it's all about inflation. All you need to look at is inflation. How do we look at inflation? Look at oil. Look at oil. Oil will tell you inflation most likely. Obviously, about 70% of the reason inflation went up, and those numbers aren't made up, 70%, 60, 70% is actually, you look at the numbers, and 60, 70% of the reason inflation went up was because of oil prices. So look at oil. If oil's up, inflation's up. If oil's down, inflation's down. And if you actually look at oil, I'm not too concerned yet, because oil is comfortably below $75 a barrel WTI. That was at $120 in the peak, and then it hovered between $100 and $90 between $90 and $110 for many months, a few months. The big drop came in June last month. So when we get the inflation numbers in July, they'll represent June's numbers, and then we'll see what inflation actually is when oil comes down. If it's still sticky, if CPI is still sticky in a couple of weeks' time with PPI, then we've got a real problem on our hands, because it's not just oil causing inflation, it'll be other things. So that's all we need to look out for. If oil's up, I'll be concerned. If oil's down, inflation's down. Oil up, inflation up. Right now, yes, we've got a spike because of the war that's been sort of restarted, but it was expected anyway. We're only up 10%, and we came down to quite historic low levels, actually. We came back down to $67, which is pre-war pricing. Now we're at $73. That's the price we were the day the war started back in March of 2026. So keep an eye on oil. I'll be covering oil. I'll be talking about oil a lot in the newsletter, and as well as with the premium members. So let's continue with some of those points that we'll talk about, which has just come out from the FOMC Federal Open Market Committee minutes. So what other points shall I tell you about? So again, let's go through some hawkish and dovish points. So the hawkish points were several participants, 5 to 7. That means commented that price pressures had become more broad-based, naming transportation, airfares, petrochemicals, agriculture imports. Broadening beyond energy was the top phrase on our watch list, and it's in. There it is. We did put a watch list together in the newsletter, and that top phrase has made its way in. So essentially, 5 to 7 people on the FOMC committee have now commented that price pressures had become more broad-based. So it's not just gasoline, oil, it's now transportation, airfares, petrochemicals, agriculture imports. So inflation is broadening beyond energy, and they have confirmed that. About 7 people in the FOMC have confirmed that. Employment worry was downgraded. Downside risk, oh God, this is they didn't know what was going to happen a couple weeks later, because remember, these minutes were written 3 weeks ago. Last week, we got something that's going to be very interesting for this point I'm about to read. So in the minutes, which they wrote 3 weeks ago, they said, employment worry was downgraded, and I quote, downside risks to achieving maximum employment had moderated a bit. They said, oof, they took a deep breath and said, okay, the jobs market is strong. And some said that earlier labour market concern had eased. So they're saying, okay, the jobs market's under control, nothing to worry about. They wrote that a little too soon. They wrote that 2 weeks before the 57,000 jobs print. That's the stale part in black and white. Ouch. They thought they had the jobs market under control. Last week, we got jobs data that said the jobs market could be cracking. So they got their hopes up, and they've just been hit hard. Several participants said current policy is not even restrictive. Oh, wow. And if it's not restrictive, that means interest rates are too low. So we're discovering a lot about what the Federal Open Market Committee have said. So far, most of it's hawkish. I will give you a couple bullish points in a second, but here's another one. Several participants said that current policy, their current interest rates, are not high enough. They're not even restrictive. And if policy isn't restrictive, cutting gets harder to justify and hiking gets easier. Inflation marked higher, May PC estimate at 4.1, core at 3.4. So many hawkish points there, all based off inflation really, and also one based off jobs. Let me just tell you a couple dovish points actually, just to see if there's any hope in the market. The dovish points are, there was a unanimous vote, 12-0. No dissent in either direction, April had thought. There's confidence in the FOMC, they're all aligned. That's good to see. Longer term inflation expectations are still well anchored. Longer term inflation expectations still well anchored. This is one line holding the framework together. So they are basically saying, if you just try and ignore the noise of tariffs and ignore the noise of mainly right now oil and war, just look into the future. Look 1 year, 2 years into the future. They're basically saying we're still quite confident that inflation will come down in the long term, and this is just a transitory sort of shock. So that's, if they didn't say that, then the market would really panic, because the 10-year bond will skyrocket and go, we are going to see inflation above expectations for years to come. They're not saying that. They're saying this is short term. Many participants said the labour market is not currently a source of inflation pressures, and several noted firms are reluctant to raise prices for fear of losing customers. So they're saying we're not too worried about the labour market causing inflation, and also companies are too scared to raise. They're taking a lot of that inflation on themselves because they're scared they're going to lose customers if they raise their rates. Again, at least the inflation is not coming over to the customers. That's what they believe. Many participants are believing that. Again, that's a dovish statement. The whole document was written during the ceasefire optimism, with the oil curve materially lower and disruptions expected to diminish. Today blew that assumption up in the other direction. Stale on jobs, stale on oil, both at once. So that's a big shame. When they wrote this document, there was a ceasefire. When they wrote this document, the jobs market wasn't cracking. When they wrote this document, oil was very low. Unfortunately, jobs market's cracking, oil is on the way back up. Obviously there was a ceasefire as well, and now there isn't. So I'd expect if they wrote these minutes today, there will be even more hawkish than what we've just seen today. The one silver lining in all of this is oil still being tame. Who knows why? I guess there's oil still flowing in the strait. I guess people aren't confident, I guess people still have optimism that this deal is holding between Iran and the US, despite what Donald Trump said this morning. That's the only reason oil is not up. Those two reasons. Oil is still flowing, and they don't have, and they think that the Trump deal is going to hold. If it doesn't, then oil, there's no reason why it wouldn't skyrocket back up. Guys, I'm going to come on to your comments and questions in a second. Let me just give you my final thoughts on the minutes that have been released. Again, this is something worth understanding and going through. If you haven't already hit the like button, please do. Please do subscribe if you haven't done so already. And if you haven't signed up to the newsletter, the link is in the live chat. So what did Warsh do? What new Fed chair, has he changed anything with the minutes? So he withheld his dot. So he actually said, I'm not going to participate in doing the dot plots and telling you where I think interest rates are going to be. Almost all participants submitted their projections, but we know it was Kevin Warsh who didn't. The statement was gutted to a few sentences on his watch, ending the committee will deliver price stability. That's a new signature. So again, a little bit of a change there. He's launching 5 independent task forces to examine issues related to the broad conduct of monetary policy. Nobody priced that yet. So yeah, he's doing some new things, 5 new independent task forces. The doc that didn't bark, no talk of accelerating balance sheet runoff anywhere. Interesting. Very, very interesting. So Kevin Warsh came out and said, this is in the build-up, he said he believes in QT, so selling bonds, which historically, if you sell bonds, the market comes down. So he wants to reduce the balance sheet of the Fed. And he's made that very clear. But today, in these minutes, we have discovered he didn't put it in writing. He hasn't said it. I think he's worried if he says it, the market will come down. So he's the dog that didn't bark. No talk of accelerating balance sheet run off anywhere. The QT push, the quantitative tightening push that everyone expected from Warsh in these minutes, the committee reaffirmed ample reserves instead. Very interesting. Just a few notes as well. Private credit escalated in the data. Redemption requests accelerating. BDC net inflows likely turning negative, and the staff sees a continued slowdown. No big committee debate at this time, but the plumbing keeps stressing. Remember, they talked a lot about private credit last time. They're worried about it. They're still worried about it, but they haven't made a big statement on it. No rate change price through early 2027. One cut in Q2 of 2027. Market pricing. One hike mid 2027 instead. So we've changed from having one rate cut to one rate hike. And again, remember, the ECB is already hiking their rates. Maybe they'll stop doing that, but they already had rates lower than us. So that's Europe. Europe is raising rates, and the market's priced at least one more rate hike in both Euro area and the UK. And guys, the next meeting is the 28th to 29th of July. So the FOMC meeting with Kevin Warsh is the 29th of July. Before we get that is what's really important, which is the CPI inflation data and the PPI inflation data, which I'll be covering live on this show. That'll be about 3 hours before the opening bell in a couple weeks' time. This is a committee that has killed its easing bias. Today, the committee came out and it killed its easing bias. They're not looking to cut rates. They got rid of the easing bias. They watched its inflation worries spread from several people to the majority of people and had 2 or 3 people ready to hike that day. But every hawkish line was conditional on inflation, written when oil was falling and jobs looked fine. Jobs have since cracked. Oil has since gone up. The document confirms the base case, a hawkish hold. Hikes live if inflation broadens. And the 14th of July, that's actually next week, isn't it? Next week, the 14th of July CPI now matters more than anything in these pages. There we go. That's the read from the minutes. Time to answer your questions. Time to have a secondary look at the market. Let's have a look at the Bitcoin chart, XRP chart, and also answer your questions. So very, very interesting. I think we learnt a lot there. So let me go over to your questions. Guys, if you have any questions, you can post it in the live chat now. Let's have a quick look at the markets while we wait for your questions to come in. And then shortly we'll be going over, to Martyn for his closing bell show and his thoughts on all of this. So oil is the only thing up today, including bonds actually up as well. But oil up 2% today, currently at $73. Remember what we've just learned. There's nothing more important than oil really at this point, because oil causes inflation. So oil stuck at $73, and that's the only reason I'm not coming out today and going, wow, I'm bearish on the market. The minutes were bearish. The market looks like it might be topped out. The crypto market looks like it's going to capitulate this year and go down another 20-30%. We're seeing cracks starting to form in AI and chips, and if you've been keeping up with the news in the newsletter, you can see other companies in China looking to do their own chip operations. So many bearish things out there, but the one silver lining, and obviously the war starting up today, but the one silver lining is oil is low. Oil is at $73, and oil is not at $73 for the fun of it. There's obviously a reason it's there, and it's probably the market is not expecting the war to really start up again. Yes, it started up this morning. We saw strikes. We've seen that previously in the ceasefire. Trump came out and said the ceasefire is over. But the market doesn't believe it, because if the market really thought that was true, oil will be up at $80, $85, and $90. Maybe we're on the way there. Maybe we're not. But the one thing that we know is oil is still flowing through the strait, and even if we had inflation numbers taken today, they would be lower than where we have been previously. So it's still an improvement if we take from where it is. And that's one silver lining in all of the data we've got. So oil up, but not up enough to be too concerned about. In fact, I actually bought oil around $67 where that gap got closed, and yeah, that position's doing really nicely. Bonds are up. If bonds are up, that's not great for the market, and I do expect a multi-year bull market on bonds potentially, as long as this structure holds and we break above sort of 4.7% and beyond. Right now, it is looking pretty bullish for a long-term move up on bonds. Again, if bonds go up, people can make money without any risk, and they might choose to do that. The S&P 500, let's have a look at how it's reacted. On the day, it's down. S&P 500 down on the day, mainly because of the Iran war news, but it actually popped up on the minutes. The reason it popped is very clear now after reading the FOMC minutes. They didn't announce quantitative tightening. How instruments can I concentrate the most? What do you mean? I'm just reading some comments. I don't understand that comment. Mute. How instruments can I concentrate the most? I don't know what you mean. Sorry. There's one reason the market went up. Obviously, the minutes were pretty bearish. People are moving over, becoming more hawkish at the Fed. Good thing was that they're all unanimous in their agreement. So that shows some sort of stability at the Fed. But the reason it popped was because everyone was expected Kevin Warsh to come out in his minutes and say we're going to start doing some quantitative tightening, which the market historically doesn't like selling into the market and selling their reserves. They actually just said they have ample reserves, and they didn't mention anything about that. So that's really the only reason the market would have reacted positively on that. I expect that to fade. I mean, there's nothing really too bullish about the minutes today. I mean, I guess that's slightly bullish, but I think the market will get over that shortly. Okay, so that's the S&P 500 down today, up on that news and slightly selling off again. Gold jumped on that, but now selling off as well. Again, if rates are raised, even though there's a war going on, gold, if people are really worried about the war, gold would pop up. But people are looking at inflation more and oil. Interest rates more. If interest rates go up, gold becomes a sort of not that worthy of an investment in that sense. Obviously, I actually like precious metals for other reasons, but the majority of people would look at gold and say, there's no return on it. I can get 5% holding bonds. Why would I bother with gold? And that's why it's down today. Ethereum, high risk. Crypto down 2% today. Bitcoin down. I mean, is that the end of? Is that the end of that dead cat bounce? We expected a dead cat bounce. I mean, is that it? Is that all Bitcoin had from 57,000? All it could do was get back up to 64,000. Is it done again? That's not very bullish. If that's all the strength it had, I mean, next time we break 60,000, we can go straight down to 52,000. XRP, $1.08. I mean, we told you, how many times did we tell you? Resistance here. If it breaks it, we're going to go up to 130, but don't get too bullish on XRP until we break this downward sloping trend line. And there we go. It's coming straight back down to the level, 104/$1 on XRP. If that breaks, then 90 cents. I'm not going to buy this every few percent it goes down. My targets are very clear. And again, I've expressed that to my newsletter members. And again, I'll be putting those in the trading post. That's a new feature coming up for the newsletter members, a trading post, which I'm showing you the top charts and some positions I'm entering and exiting every week. If you want that, 3 people can join today for 25% off. Of course, you can join for the monthly or the free plan as well. There's the link in the live chat. Please stop spamming. How much time taken for FOMC? Unfortunately, that makes no sense. I'm going to have to put you in a very short timeout. I'll give you a 5-minute timeout. Just please don't spam the channel. It doesn't let us answer all our members' questions and everyone's question who've been waiting patiently with asking once. And your question didn't make any sense anyway. XRP down. It's probably going to continue to go down. Everyone hated me last year, or a year and a half ago, when I said the bear market's coming. XRP was at $3, $2.50, $2.60, and I said we're going to keep going down. We're going to keep going down, and look, we are. There's a few times where we could have had a breakout, but we didn't. A few days ago, if that breakout occurred, we could have gone to 130. We didn't. So instead of selling, I'm starting to build my base $1 with those buys. I didn't want to sell at 115. If we went to 130, maybe I would have. But I don't mind building a base here. I've bought a 105, $1, and I'll buy there again, maybe a little bit more, and then closer to 90 cents. I think 2026, you did. What do you mean you did? I did what? Twonster. Yeah, what do you mean I did? So yeah, XRP is 90 cents will be my sort of 93 cents will be my next target, then probably 80 cents, and then leave a bit more. The lower we go, the less likely we get there, but maybe even leaving some money on the side for 55 cents. I don't think we'll get there, but never say never with crypto, and definitely be prepared for it. Limit orders are the way. FTSE down today, and silver will be following gold, but to a greater extent. Silver down 2.27%. Next level I'm buying at is $50. Okay, so those are top ones. Again, I am looking at some things behind the scenes. Alibaba up 11% today. That was one we were really interested in. Yeah, other things I'm looking at. I don't want to give away all the positions we're looking at. Just have a look at one of them. What was it called? Let me look in Discord. I'm forgetting what one of the positions I started. Okay, so let me check this. Oh, there it was. Forgot what the ticker symbol is. Boston Scientific. Let's keep an eye on it. Let's see what it's doing. Yeah, I don't mind DCing into this position. $35, $30. Yeah, just the newsletter members will know what I'm talking about there. I'm not going to get into too much detail there. Let's go over to your questions, and then we'll be ending the show. And I think I've just got a message that Vaz is going live. I don't have a link for it yet. Vaz, if you're watching, can you send me a link in Discord or in the live chat? Can you set up? Can you set it all up, the redirect and the links? That'd be great. You did strategize. Yes. Oh yeah, I did say XRP would go down. Yeah, Twansner. Yeah, I did say that. And I mean, the evidence is on YouTube. I mean, people can go back and watch that video. I don't. Yeah, it's not. I'm happy that I got it right. Because if I got it wrong, a lot of people would be unhappy with me. But I don't think enough people really took it in, and too many people, unfortunately, because of these stupid influencers out there that all they care about are the selfish, greedy people out there that all they care about is making money, that will continually say XRP is going to $100, $1,000, don't sell your XRP, never sell. Those people made people lose a lot of money, and I tried to warn against that, and I did my best, and I still got hate for it. I don't care. I could have got a lot more views by keep saying XRP is going to go to $5, $10, which once upon a time I did think there was a path there. That path changed, and I changed my mind. There's nothing wrong with changing your mind once the analysis changed. And then we caught the double top at $3.30. We caught the breakish barrel $3, and we're fully out by $2.50. And got a lot of hate for it, lost a lot of views for it, but it was the right thing to do. Bitcoin update. Yes, Bitcoin update. Let's have a look at Bitcoin. So Bitcoin's the same thing. We're in a bear market. We're going to keep going lower until the trend breaks. Unfortunately, the trend hasn't broken yet. Of course, Bitcoin is probably the most sensible crypto to be involved in. Bitcoin at 62,000. Yeah, it's the same story. 60,000 support, 57,000 support. But the real story is, if we break 60,000 the previous lows, I'm really looking to. I haven't really built up a big enough Bitcoin position. I bought some at 59,000, but I want to buy some at 52,000 and then potentially even 40,000. So my limit orders are set up at 52,000 as well. So that's Bitcoin. So hopefully that gives you an update there. Where was the comments? There. Oh, here we go. This is where we're going. So Vaz is going to be live in a couple minutes time. So instead of Martyn live, I'm good. It's going to be Vaz. Vaz is live in 2 minutes time. Guys, if you're investing in the stock market, if you're investing in the crypto market, you obviously like new innovative technologies like AI, like crypto, and you want to make money. Vaz is our EV toll expert. EV toll is a new industry that I think is going to be like Tesla. I invested in Tesla in 2018 when no one believed it. Everyone laughed at it. I'm going to say something and you're probably going to laugh at it. Flying taxis. Electric flying taxis. You're probably laughing at me like, that's never going to happen. Well, guys, People said that to me about Tesla's never going to make it out. Electric cars are never going to be a thing. It's happening. eVTOLs are happening. Electric flying taxis are happening. And we've got our very own reporter, Vaz. He's going to be live on the ground. He's going to be doing interviews with some of the CEOs. You're going to check him out. Stay exactly where you are, because in a minute's time, he is going to be live and you want to watch it. At least give him 10 minutes of your time just to explain the sector and understand what's happening in 12 minutes time. And the stocks that are interesting there, because I am also building a pie with our eVTOL expert to release to you guys for the newsletter members for the stocks that I'll be investing in. But Vaz is our expert. There is no better expert in the eVTOL space. I can confidently say that. It wasn't an FOMC meeting, it was an FOMC minutes. More important than the FOMC meeting. We covered it. Go back 30, 40 minutes if you want to see it. You ever looked at Sensei? No, I haven't looked at it, Nick Jones. If you could send me a message on Discord, I'll look at it. Vaz Live, let's go over it. Yeah, let's all go over. Where would you buy cryptocurrency in the UK? I'll probably look at Coinbase, Revolut, KuCoin, Kraken will be my suggestions. Probably Coinbase or Revolut for ease, depending on what plan you have on the fees. Thanks, Sensei. If you want a referral, you can message me on Discord. Any news regarding FOMC, guys? Path Patel. Yeah, we've covered it all. If you go back and we'll see it. They're already flying. It will happen. So many people see other use cases in the flying tech. Yeah. There is emergency transport, logistic, military. Military is probably the biggest money maker as well. Okay, we're going over to Vaz. The link is there. Let me give you it again. Is he live? He's probably going live when I end. So let me give you the link there. Guys, if you haven't joined the newsletter yet, you can join right now. Quick reminder of the perks. Every trading day, 2 hours before the opening bell, you'll get all the news stories you need to know. The 5 top stories, the one big thing, the number to worry about. And it's presented in such a nice way that it's just 2 paragraphs. Or at the top of the newsletter, it'll just tell you the top headlines so you can go down to your favorite story. You don't need a million news sources. You don't need to spend thousands on different Bloombergs and Reuters. I scan them all. I look at them all. And then I put the 5 top stories that you need to know about. I put the chart of the day, the deep dive. That's just one of the perks. You get the event cheat sheets for CPI. For example, that's going to be such an important CPI event. I'm going to spend hours and hours putting together a cheat sheet so everyone understands. Whether you're a beginner or an expert, it's going to be useful for you. You get trading view indicators, 3 trading view indicators backed up by academic research. I'll be giving to you for free as part of the newsletter. The chart training course, 8 years of charting, thousands of dollars spent on chart courses. I made my own based off academic research, made it really simple because that's the way to win. And I've released to you guys a 3-hour video. You understand everything. £5,000 portfolio challenge, the net worth tracker app. It's just literally a whole app that people would charge $20 a month for, or even more. I'm giving to you for free as part of your subscription. Access to the Discord community and one-on-one DM access, plus my trading post coming out shortly as well. So the link for that is there in the live chat. Sign up either for free or get the 25% discount for the annual plan if you want all of these perks. If you sign up for free, you'll get the daily newsletters. So until next time, as always, take care of yourselves and each other. Stay exactly where you are because we're going over to Vaz with a very, very important report. And if everyone could do me the biggest favor, when you click on this link, just say, Sensei sent me. Sensei sent me. Just spam his chat with Sensei sent me and hit the like button on your way in. Thank you, everyone. Until next time, as always, take care of yourselves and each other. Bye-bye.